Friday 30th of May, last day of May, and video go out 10:30 morning, so we'll look up the live market in front of us, and as usual we'll look at November wheat 2014, and we're presently got the monthly chart in front of us, and you can see here this big red candle here, the last candle on the chart here is obviously this current month of May, had a high 160 and we're down here 144, so that's a £16 a tonne drop. Where are we? Right, let's have a look. This is the monthly chart and it's going back to year 2004, and I'll put ranges on here. You can see that the high range obviously is £200 a tonne, the mid range is 150, and obviously the bottom range is £100 a tonne. We last saw £100 a tonne in 2010, 2009, 2008. So really we've come back to this mid range. We were back in this mid-range here in the end of 2012 and doing 2011. We had a chance here that obviously I was looking at doing my early wave count here, breaking up over this 160 and then going up here to 170 and breaking out on the upside. Obviously with this action that's now happened, we've validated this move. Where can we expect to go next and what clues have we got? That's why we're starting with a long-term chart here. And then obviously we'll zoom in to see what we can see. So next we go down to the weekly chart here, and this is the last 5 years, and you can see here that we've now fallen below the 60-day moving average and we are going away from the mean average of the last 60 months. This gap here is unusual. It's a big gap down. It gapped down here 2 weeks ago. I've looked back over the last 5 years, I can only ever find another big gap as big as that. It was back in 2010. So obviously that's quite a significant point that we want to keep an eye on. Lows here, last low was seen here, the beginning of 2014, 140, and below that we've got 135 seen at the end of 2011. So we now zoom from the weekly chart down to the daily chart. And you can see here that we're now going to test this low here of 142, which is of February of this year, 2014. What can we say? Let's have a look, see what clues we've got. Now, we obviously, at the start of this week, we gapped down from after the bank holiday from 146, and we've now come back to fill this gap here. This was similar that happened in March when we gapped up through the 60-day moving average. So we've now gone back and filled this gap here, so the market can go down and test this 142. And I think as the live market is at the moment, we are practically around 144 at the moment, so 43. So we are heading back down again, and I would see a test of this 142. We have left this large gap up here. It is unusual, hasn't been seen for the last 5 years. So my indication is that sometime we are going back up to fill this gap. So we have got potential of a £10 rise sometime. Now to get some indication of when this is going to happen, obviously we'll just have to keep an eye on the short-term moving average, the 5-day moving average, and I would look to see a closing candle above that to give us a trigger. At the moment, it's not giving us that trigger, so what I would expect to see is a consolidation within this range of, say, around £150 a tonne. Obviously, if prices break below this last swing low, 142, alarm bells go off, and then we start to see that we could be heading down to test that 35 next to the down support level on the monthly chart. But obviously, I'll keep an eye on that, and obviously we'll discuss this next week as this price action unfolds during the week. Obviously, the leader behind this has been the fall from the US market. This, I've got a monthly chart here, going back to 1990, a long-term chart. You can see here $9 is the high range of their moving average, their range. $7 is their mid-range, and $6 is the low. So basically we're back into a range that's held for the last 6 years. We had a potential here, as you can see here, breaking up upside. This hasn't happened, and I can see consolidation within this range. Does that get confirmation on the daily? At present, yes it does. We're coming back here down to this sort of 650 level, which was a low here last September. But obviously moving averages all crossed. No, they haven't. The short term has crossed the long term. Yes, just crossing here. So there is potential for further falls, and we could see support not until down here at 620. And then finally looking at the rapeseed market, obviously we're in a range now. We've tried breaking down, we've tried breaking up, and we're going sideways within this 360 range. And that's all we can say on that chart at the present moment. So obviously coming back to the daily wheat chart is that we are key at the moment is that we see this, we're likely to see this test of this low here, look for it to hold, and then I'll look for some kind of signal of a closing above the 5-day moving average to see if we can get a bounce to go back up, fill this gap. If we do break this, then obviously we've got to put some numbers on a new trend that's starting to the downside. And I'll put an update this time next week. Thanks for watching.